So speculation versus gambling. So people always relate speculation to gambling, right? So some of us think that speculation is gambling so that we don't speculate. But because someone thinks that speculation is gambling, oh, that's why I'm really excited. So I keep on doing speculation and doing short-term investment, right? So what do I think about speculation? So throughout my 20 years of investing experience, the first, I would say a decade, I was only doing speculation because I was really in a hurry of returning the debts and was in a hurry to buy a house, stuff like that. So I would say that I'm one of those who have the most experience in losing money because short-term charting, all kinds of investment tools like futures, contracts, and options like that, I've done all of them. Million ways to die, I've tried all of those, alright? So my point of view of speculation today, I'll explain that. First of all, if you're new to my channel, please subscribe to my channel and also like my Facebook page. You'll be one of the first one who will be seeing my latest videos. Hopefully you can give me a thumbs up and also share the video to your friends. So when we are thinking the word speculation, it's sort of like really risky, right? So in Cambridge Dictionary, it says the definition is the activity of guessing possible answers to a question without having enough information to be certain. Okay? So it's something like you don't know, you don't have proof and evidence, but you want to guess. Because the risk will be higher, the return will be larger. Okay? So that is the definition of speculation. So that is most likely exactly what we're thinking, right? That is why some people try to avoid speculation. Some people really enjoy speculating. In order to define speculation in investment, for me, there are three ways. First of all, it has to be short-term. Short-term investment, short-term speculating. The second one has to be charting. You have to use charting analysis and technical analysis, right? Because you really don't care about the assets behind. You really don't care the company, what is the name and what is the precedent. You really care is the chart. The third one usually involves with leveraging. Three things. So there are 4 strategies and 2 conclusions that I have to make for you guys in order to understand more about speculation, or in case you want to start speculating, what should you do? 4 strategy first. The first one is short-term, right? Short-term investment. Some people tend to ignore these little details, but it is really important as a speculating strategies. The first one about short-term is you really have to define well of your profit and loss ratio. So some people always think that if you speculate, you will just buy something and then set a cut loss, but always forget to measure your potential return and maximum risk. And if you know and understand the maximum risk and versus the potential profit, and to be more pessimistic in both risk level and return, then that is a good trade that you can make. So people are too optimistic in trading, right? So that is not a fair or might not be a good trade for you to invest in. The second, charting. So always set a cut loss area and be disciplined, okay? So people are like that. When you set, let's say $5 is cut loss, but eventually when the price is breaking down below $5, what would people say? Some of us will say that, oh, now today there's a new signal, right? There's a new trend line, so I should set the cut loss lower, right? So that means you suck, right? Because you are bad at charting analysis, because everything has to be well planned before you click the buy button. Why I should say something harsh like that? Because it is something that we make day to day, including me. If we say it louder and we call out ourselves more often, we won't make the same mistake because it's not about the skills, it's about the mentality. Okay? Let's say a trend line involves 2 points, 2.19, right? So you will say that if today I change the cut loss level lower, why? Because if that 2 points happened before today, that means you're bad not at charting analysis. It's bad at investing mentality. Oh, you say that, oh, today, because this candlestick, this is the second point, this is the new point, right? You're wrong again. Because you never draw a channel, draw a pattern, or draw one line with today's data, right? That's again wrong. So, again, discipline. If you draw a chart, discipline. And if you do charting analysis, technical analysis, you really have to be disciplined. It's not about your skills, it's about your head, what's inside your head. And you have to assume that charting and technical analysis is only reflecting what had happened before. So if things change, let's say fundamental analysis, some economic data, and also something happened globally, then you might as well just change your strategy or even exit your position. The third one, leverage. People literally die without thinking about this step, okay? Leverage involves margin, right? The risk will be a lot higher, it's multiplied. Usually, if you invest in future contracts and options like that, the leverage will be usually 15 to 20 times. Of course, you can leverage your leveraged portfolio, right? That could be 400 times or 4,000 times. That doesn't matter, as long as you have your maximum risk calculated. People only think of the point of view of the principal amount. That's wrong. The principal amount is wrong. You really have to calculate your risk according to what you have already leveraged. For example, 20 times. If you speculate and invest in an asset that is using 10% of the cash and investing in that future contract, and if that's 20 times, and that you have to understand that the maximum risk is you are investing 2 times of your whole portfolio. So is that being stupid? I don't think so. Because again, you have to be pessimistic at all times. And then everything will only be better. Every return will be higher. So the last strategy is absolute return. So the key thing, and one of the reasons why I would like to implement some kind of speculation strategies in my long-term portfolio is most likely I want to try to generate a portfolio that has absolute return. What is absolute return? Is that you're trying to make a portfolio that yields a correlation that is not too correlated with the market, what you're holding right now. So there's the systematic risk and non-systematic risk, right? Any risk that you can diversify, but you can never diversify the risk from the government and monetary policies and interest rate policies, stuff like that. But with statistics or charting analysis or something like algo trading, you can have a chance of making a portfolio that is not correlated sort of to the mass market. So because of that, you may be able to survive in big time adjustment situations or even in the bear markets. So that is one of the reasons, most likely, why I would still speculate nowadays. So two conclusions you really have to listen to before you speculate. The first thing is you really have to start off with little money. For me, I have $100, I will only invest in $3 in these portfolios, okay? So whenever I lose all the $3, I will really have to rethink this project again. So you really have to be mentally separating two portfolios away from yourself, because if that project doesn't work, just like an investor, you won't inject another capital inside the project, right? If that doesn't work, that doesn't work. If that would work again, you will have to understand how I should improve the strategy. I understand why I make mistake. You can inject another $3 into this project. So start off with less money with limited risk. The second thing is to buy and invest only in fair investment tools. What are fair investment tools? Future contracts, options, ETFs sort of is okay. Funds is okay. But those like ELN products, accumulator, and also warrants, stuff like that, they are derivatives of derivatives. There are some derivative products that are derived by institutions, not by exchange, right? So the formula and the system, the structure behind is more of like a human. It's something like you can never understand the mistake and the reasons why you make the mistake and the reasons why you make profits, okay? Without the reasons behind, you can never optimize your structure. If you cannot optimize your portfolio and strategy, you can never get an absolute return the portfolio, okay? If you have no chance of getting absolute return portfolio, then why should you speculate, right? You can might as well just go to Las Vegas, just go to Macau. That is the difference between speculation and gambling. Hope that you enjoyed the video, and please give me a thumbs up and also share this video to your friends, and subscribe and like my Facebook page and YouTube channel. I'll see you next time. Investing made easy. See you next time. Goodbye.